A retail empire spanning 30 countries loses 85% of its stock value in 5 days. The company is not a startup. It is one of the largest retail conglomerates on Earth, and the fraud behind the collapse has been running for 15 years. Here is what actually happened. Steinhoff International was founded in 1964 by Bruno Steinhoff in Westerstede, a small town in northern Germany. The original business was simple: source cheap furniture from Eastern Europe and sell it to West German consumers. It was an unglamorous trade, built on logistics and margin. In the 1990s, the company pivoted south. South Africa, emerging from apartheid, was opening its economy to foreign capital. Steinhoff moved its operational headquarters to Stellenbosch and listed on the Johannesburg Stock Exchange in 1998. The man who would define the company's next 2 decades was Markus Joost. Joost joined Steinhoff in 1995 and became CEO in 2000. He was charismatic, aggressive, and obsessed with growth. Under Joost, Steinhoff began acquiring retail brands across Europe and Africa at a pace that made analysts nervous. Conforama in France, Poco in Germany, Pepco in South Africa, Poundland in the United Kingdom. By 2016, Steinhoff operated more than 12,000 stores across 30 countries. Annual revenue had reached $19 billion. The company relisted on the Frankfurt Stock Exchange in December 2015, seeking access to European capital markets. Its market capitalization briefly touched 22 billion euros. Steinhoff looked, from the outside, like one of the great retail success stories of the post-apartheid era. Institutional investors poured in. Pension funds bought shares, banks extended credit. The South African government's Public Investment Corporation, managing the pensions of state employees, held a 10% stake. The surface was immaculate. Beneath it, the structure was rotten. The fraud at Steinhoff was not a single act of desperation. It was a sustained, systematic program of accounting manipulation running from at least 2002. The mechanism was intricate. Steinhoff created a network of offshore entities, shell companies in jurisdictions including Cyprus, the British Virgin Islands, and Liechtenstein. These entities did not operate real businesses. They existed to generate fictitious transactions, fake sales, inflated asset valuations, fabricated income streams. Steinhoff would sell assets to these related parties at inflated prices, booking the difference as profit. The cash never actually moved. The profit was invented. Over 15 years, the scheme inflated Steinhoff's reported profits by an estimated 6.5 billion euros. Assets on the balance sheet were overstated by a further 6 billion euros. The company's auditor was Deloitte. Deloitte signed off on Steinhoff's accounts for years without detecting the fabrications. The complexity of the offshore network made verification extremely difficult, but the warning signs existed. In 2015, a German newspaper, Manager magazine, published allegations of accounting irregularities at Steinhoff. German tax authorities opened an investigation the same year. Joost dismissed the reports as competitive smears. The share price barely moved. Investors accepted the denial. In 2017, Steinhoff attempted its most ambitious acquisition yet, a takeover of Shoprite, South Africa's largest supermarket chain. The deal collapsed. Steinhoff also failed to acquire Argus in the UK. The company was spending aggressively on deals it could not sustain. By late 2017, Steinhoff carried more than 10 billion euros in gross debt. The acquisitions had been financed largely through borrowing against inflated assets. The entire structure depended on the fiction remaining intact. In November 2017, Deloitte refused to sign off on Steinhoff's annual financial statements. Auditors had identified transactions they could not reconcile. The news was kept internal for 2 weeks. On December 5, 2017, Steinhoff released a short statement. It acknowledged without detail that accounting irregularities had been discovered. Markus Joost resigned immediately. The markets reacted within minutes. Steinhoff shares fell 63% on the Frankfurt Stock Exchange on that single day. By the end of the week, the stock had lost 85% of its value. 10 billion euros in market capitalization had evaporated. The Johannesburg Stock Exchange suspended trading in Steinhoff shares on December 7th. Steinhoff's chairman, Christo Wiese, had been the richest man in South Africa. His personal stake in Steinhoff was worth approximately $3 billion at the peak. Within a week, that position had lost more than $2.5 billion in value. Wyss had also used his Steinhoff shares as collateral for personal loans. When the shares collapsed, the banks called those loans. Wyss was forced to sell assets across his personal empire to cover the calls. The South African Public Investment Corporation, the pension fund for 1.2 million government workers, lost an estimated R23 billion, roughly $1.6 billion. These were not abstract numbers. They were the retirement savings of teachers, nurses, and civil servants. Steinhoff's operating businesses, the actual stores, were largely solvent. The fraud had been constructed at the holding company level, not inside the individual brands. This meant the stores could continue trading while the parent collapsed, but the debt burden cascaded down. Conforama, the French furniture chain, began a restructuring process in 2018. It ultimately closed 32 stores and cut 1,900 jobs in France alone. Poundland in the UK was sold. Poco in Germany was sold. Steinhoff began dismantling the empire it had spent 2 decades assembling. PricewaterhouseCoopers was appointed to conduct an independent investigation. The PwC report, released in 2019, ran to thousands of pages. It identified a small group of former executives and external associates who had orchestrated the scheme. Joost was named as the central architect. The report described a deliberate effort to mislead auditors, investors, and regulators across multiple jurisdictions. In South Africa, the National Prosecuting Authority opened criminal proceedings. Marcus Joost was charged with fraud and theft in 2022. He denied all charges. In May 2023, before his trial could begin, Marcus Joost was found dead at his home in the Western Cape. His death was ruled a suicide. The legal proceedings against other individuals continued. Steinhoff itself entered a debt restructuring process that would take years to resolve. At its lowest point, a Steinhoff share that had traded at €6 in 2016 was worth less than 2 euro cents. The company negotiated a global settlement with creditors and claimants worth approximately €1 billion. For investors who had lost 10 times that amount, it was a fraction of the damage. Lloyd, the auditor that had signed off on the fraudulent accounts, faced legal claims from shareholders. The firm reached a confidential settlement in South Africa in 2023. The terms were not disclosed. Conforama was eventually sold to a French private equity consortium in 2021. Pepco, the African retail arm, was spun off and survived as an independent company. It trades on the Johannesburg Stock Exchange today, separated from the wreckage of its former parent. Steinhoff International Holdings was formally delisted from the Frankfurt Stock Exchange in 2023. The entity that had once carried a €22 billion valuation was erased from the exchange where it had sought legitimacy. What made Steinhoff so destructive was not the audacity of the fraud. Accounting fraud is not rare. The mechanisms Joost used, inflated assets, fictitious transactions, offshore vehicles, had precedence. What made it destructive was the duration. 15 years of compounding fiction, layered across dozens of jurisdictions, embedded in the accounts of a publicly listed company on 2 major exchanges. Every year the auditors signed. Every year the investors bought. Every year the fiction grew. The system designed to catch this, auditors, regulators, ratings agencies, institutional due diligence, failed completely, not because the signals were invisible. Because the company was large, the returns looked real, and no one wanted to be the person who stopped the music. The South African government commissioned a parliamentary inquiry into the Public Investment Corporation's losses. The inquiry found failures of governance and due diligence inside the fund itself. The fund's CEO at the time of the investment, Dan Matjilla, resigned in 2018. He denied any wrongdoing. The Steinhoff collapse remains the largest corporate fraud in South African history, and one of the largest in European corporate history. The total value destroyed across shareholders, creditors, pension funds, and employees exceeded €15 billion. In Stellenbosch, where Steinhoff had its headquarters, the offices are now occupied by other companies. The glass and steel that once announced a global empire now carries different names on the directory. In Frankfurt, the Steinhoff ticker no longer exists. The pension funds that lost billions are still recovering. Some never will. The man who built it all died before he could be held accountable in a court of law. And the system that was supposed to catch him signed the accounts for 15 consecutive years. That is the Steinhoff story, not a story of a company that failed to compete. A story of a company that succeeded at deception for longer than almost any other in modern corporate history. And when the deception ended, it ended in a single week. 22 billion euros to 2 euro cents, 15 years of fiction, 5 days of reality. The number that defines Steinhoff is not the billions it claimed to be worth. It is the 63% it lost in a single trading session on December 5th, 2017. That number cannot be faked. Everything else was.